Short-term equity investment. Here's an example of all the things that can happen to short-term equity investments, meaning trading securities and available for sale securities, in 1 year. Enjoy the example. So we have a company and the following information is available. There's 2 trading securities, Hauser and Miller. And there's 2 available for sale securities, Letter and Nortic. And they want to know what is the effect on the income statement of all the transactions and price changes during the year. So here we have Hauser. Hauser, remember, is a trading security. We bought it for 90 shares at $22. Which means we debited trading securities and credited cash. But then during the year we sold 60 shares at $25. So we had an actual gain during the year on 60 shares of $3 a share, or a $180 gain. So that's an actual gain on the sale of trading securities. In addition, during the year, Hauser Company declared and paid dividends to us of $40. So that also will show up on the income statement as dividend income. Then at the end of the year, the market value of the stock is $25 on the last day of the year. We bought it for $22, which means that it increased $3, and we have to mark up the remaining shares, which are 30 shares. We started with 90, we sold 60, so we have 30 left. So we need to mark up to market 30 shares, increase of $3 a share, or $90. So that $90 is what's called an unrealized holding gain at the end of the year, and because it's trading securities, it also will show up on the income statement. Our second trading securities, Miller, was purchased during the year, and we bought 180 shares at $40 a share, where we debited trading securities and credited cash. During the year, we sold 90, or half of those shares, at $30 a share. Well, we bought them at 40, we sold them at 30, so we lost $10 a share for 90 shares, or we had an actual loss on the sale of trading securities of $900. 90 shares, $10 difference or decline in value. Miller Company also declared and paid a dividend of $85. Dividend income shows up on the income statement, so that 85 will show up on the income statement. Dividend income. And then at the end of the year, Miller Company's value was $35. We bought it at 40. It's now 35. Well, how many shares do we have left? We sold 90 of 180, so we have 90 left. 90 shares, decline of $5 a share from 40 to 35, means we have an unrealized holding loss of $450. So for trading securities, that shows up on the income statement, we had an unrealized holding loss of $450, an unrealized holding gain of $90, so it netted to an unrealized holding loss of $360. $450 minus $90. So that's it for trading securities. But what about available for sale securities? They're treated differently, aren't they? But not in the purchases. So in letter books, when we bought shares, 75 shares of letter books for $48, we debited available for sale securities and credited cash for 75 shares at $48. Well, we sold 5 of shares at 55. So if we sold 5 at 55, what was its basis? 48, what we purchased it for. So we had a $35 gain. 5 shares times the difference between 55 and 48. So $35 gain. And that's an actual gain that shows up on the income statement. In addition, Letter Books declared and paid a dividend of $30 to us, so we have dividend income on the income statement of $30. At year end, though, the fair value is $46. How many shares do we still have? Well, we sold 5 of original 75, so we have 70 shares left, and we have been carrying those at 48. Well, the value is now 46, so we're going to have an unrealized holding loss of $2 a share, 48 versus 46. So 70 times $2 is an unrealized holding loss of $140. But that doesn't show up on the income statement, does it? It shows up on SHE and other comprehensive income. Nordic Equipment also is available for sale. We purchased it for 170 shares at $70. Available for sale securities, credit cash. During the year, we sold 145 of those shares. So there, we sold them for 95. We bought them for 70. So we had a gain on the sale of Nordic Equipment of $3,625, or 145 shares times $25. The dividend income, which shows up on the income statement for Nordic Equipment, is $50. But at the end of the year, the fair value was $90. So we need to write up the remaining 25 shares from $70 to $90, or a $20 increase. So we're going to have an unrealized holding gain of 25 times 20 is 500. And that again shows up in SHE. Does not show up on the income statement, does it? So what's our net? SHE that shows up in other comprehensive income. It's 500 minus 140, or $360. So the little letters here are the answers to the various questions. And if you'd like to see it a different way, here it is. So notice I've taken each of the trading securities, shown their unrealized holding gains, unrealized holding losses, how did we get the ending balance for the year, and showed the entries we made and their impacts on the income statement. We also, for AFS, show the 2 AFS types of stocks, their unrealized holding gains, losses, sales, and how did we get their balance. Also, the unrealized holding gain and loss shareholders' equity account, where we can see the balance, resulting balance of $360 gain. So, and that sits there, that does not get closed, so don't close it. So next we turn to an example of multiple years.